I have 50,000 Ghana cedis. Should I go for treasury bills or I should buy shares? This is one question someone sent to me, and I want to explain what you should do if you follow yourself in that category by first explaining what the two investments are. So first of all, when you talk of treasury bills, basically you are giving your money to governments of Ghana. So you give your money to the government and then you expect for a returns over a period of time. For shares, you give your money to a company. You are putting your money into the company as a shareholder. It means that you are buying a stake in that company. Treasury bills are short-term investments, usually between 3 months or 1 year. So usually in finance, when you say investment is short, it means investment that has a maturity within 1 year. Shares are long-term investments. So it means that you are investing in shares, you are looking beyond 1 year. So 2 years, 10 years, 15 years. Some of the shares are even century. They are transferred to the next generation. So that's what shares is all about. And then again, when it comes to liquidity, you can easily convert your shares, your treasury bills into cash. What it means is that I can easily go to my bank today and ask the bank to give me back my cash after buying the treasury bill. So we say it's highly liquid. However, shares, you need to put in the request and then the broker will have to get somebody else to buy it and then you get your money back. So that is how shares also work. So shares is not highly liquid, but treasury bill is highly liquid. Again, treasury bill is what we call fixed term investment. Fixed term investment here means that you know exactly the returns you are going to get. If I'm investing 50,000 and the rate is, let's say, about 10%, I know at the end of the year I'm going to get 5,000. That is my returns. Call it fixed. I can predict. However, when it comes to shares, you can't predict the returns you are going to make. The returns are based on two factors. One, you are looking at the performance of the company within the year. That will tell whether the share price will go up or down. Then again, the impact of the industry. So let's say you take a company like MTN. MTN plays within the telecommunication network. If there's something happening within the industry that is not favorable, it can lead to MTN shares dropping down. So that is also something that can drive the price of shares down. Again, you're also looking at the possibility of making returns from shares. You can make returns from shares apart from the price going up, also from dividends that are paid. Dividends are basically the returns you make from the investment that you've had in shares. So if the company makes profit and they decide to sell to share the profit among shareholders, we call it dividends. So when you're investing in shares, you're also expecting to get dividends if the company makes profit. So that again is not predictable. You can't predict how much you are going to make on that particular shares that you are buying. However, for fixed deposits, you can highly predict that. When you want to go for treasury bills, you don't need any broker. You can just go to your bank, complete your form, and then make sure you have the money in your account for your account to be debited, and then the investment will start running for you. However, for shares, you will need to be able to get a broker, and the broker acts as an agent for you. So the broker will help you to buy the shares from any company that is listed on the stock market, whether MTN, EcoBank, Ghana, any company that is listed, the broker will help you to buy the shares from that company, and that means that you need a broker to be able to buy shares. For treasury bill, you go straight to it. Now, the final one that is very important is the risks. Treasury bill is a low risk investment. It means that the possibility of you losing your money is very low. It doesn't mean that it cannot happen. It can happen. As we speak in Ghana, it has never happened. However, the possibility of it happening is low, and therefore you have comfort that, oh, if I'm investing in treasury bill, it's very low. But for shares, it's high risk investment because the prices of the share can fluctuate within the year. Some of the companies like MTN, we had the share price rise very high, it dropped a bit, and it's going up again. So that's how volatile the share market is. So when you are investing in shares, it's not always the case that the share price will keep rising. There are times that depend on the time you want to sell your shares, you may have the share price very low, even lower than how much you bought it. So that's why we say shares are high risk investment. Now, if you have 50,000, you need to choose between the two. If you want to go for low risk investment, you want an investment that you can easily predict the returns. You want to know I'm able to get, let's say, 10,000, 5,000, then you go for treasury bills. However, if you want returns that is higher, but that means that you cannot predict the returns and the risk around is very high, then you go for shares. Again, if you want a low and short-term investment, you are thinking of, let's say, 6 months to 1 year, then treasury bill is for you. If you want a long-term investment, let's say you are 25 years, you want to be investing till you are 35, 40 years, then shares will be a very good investment for you. If you leave it for a longer period of time, you'll be able to make good returns out of that than treasury bills. So guys, these are the factors you need to consider before you choose either treasury bills or shares. They are not the same. They run on different systems and different explanations. You need to understand them before you jump into any of them. So when you come to my inbox and you want to know which investment should I go for, treasury bills and shares, That is the explanation for you. If you have enjoyed my video, as I always say, try and share this video, subscribe to my channel on YouTube, Patrick TV GH, and make sure someone else gets to see this video as you have watched.